Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. One of the hardest hit segments of real estate investment trusts, or REITs for short, sector during the recent period of rising interest rates was commercial mortgage REITs. Investors had concerned about the possibility of commercial mortgages default, but so far, the impact of default has been very minimal. High interest rates drive up the cost of borrowing capital and erode margins, thereby leading to reduction in profits and free cash flow. Recently, however, REIT stocks have been rallying on expectation that the Federal Reserve will begin cutting rates by mid-year. And while majority of REIT stocks have recently made a big move upwards, there are still opportunities for investors to make gains. For instance, there is Starwood Property Trust Inc., traded on New York Stock Exchange under symbol STWD, a high-yield mid-cap real estate finance company that's the biggest commercial mortgage REIT in the US. With the Starwood Property stock, investors get opportunity to make capital gains while collecting steady high-yield dividends. John?
Yeah, thanks, Mo. Yeah, Starwood Properties is actually an affiliate of the global private investment firm Starwood Capital Group, and it manages a diverse portfolio that's worth more than $27 billion. These investments are spread across the REIT's commercial and residential lending, infrastructure lending, investing and servicing, and property business segments. As of this recording, Starwood Property stock is down by around 7% year to date, but it's actually up almost 19% year over year. The stock traded as high as $27.01 per share back in June 2021, before interest rates began to climb. As of this recording, Starwood stock is actually down by around almost 30% from its record high. Now, this is despite the company driving its 2023 revenues up 32% higher on an annual basis. Now, if you take a look at the company's chart at incomeinvestors.com, you'll notice that STWD stock was hovering around the midpoint of its 52-week range and potentially taking a run at recovering to its 50-day and 200-day moving average. A break above that level could see Starwood Property Trust Inc. shares price rebound to its record high.
How is it doing financially?
Starwood Property Trust revenue has actually risen for 3 consecutive years, hitting a record high of $2.05 billion in 2023. That was well above the company's pre-2020 health crisis high. Analysts estimate that Starwood Property Trust will grow its revenues by a pretty solid 4.5% to $2.14 billion in 2024, before contracting it's by almost 6% to $2.05 billion in 2025. Now, on the bottom line, Starwood Property Trust has consistently generated diluted earnings per share profitability, but it needs to generate more consistent growth following a drop in 2023. Analysts expect Starwood to report lower adjusted earnings of $1.94 per diluted share for 2024, compared to $2.05 per diluted share in 2023. And this is expected to be followed by $1.94 per diluted share next year, 2025.
How are the dividends looking here?
Starwood Property Trust Fund statement shows consistent positive free cash flow growth into the last 4 years. Positive free cash flow allows the REIT to pay dividends and reduce its total debt of $19.66 billion. Moreover, the expected lower interest rates will help reduce the company's borrowing costs. Now, Starwood stock's quarterly distribution of 48 cents per share, or $1.92 per share, translates into a forward dividend yield of 9.44%, which is actually in line with its 5-year average dividend yield of 9.49%. I'm not convinced that Starwood Property Trust will increase its dividend anytime soon, but given the company's debt load, but I expect it to at least continue to pay a dividend.
John, thank you so much for your analysis. Starwood Property stock provides investor with reliable income and potential for capital appreciation. STWD stock has a moderate amount of institutional ownership, with 591 institutions holding 52.2% of its outstanding shares. Moreover, company's insiders have been buying up shares of Starwood Property Trust Inc. to the tune of net 1.2 million shares over the last 6 months. We view this as a signal of confidence of institutional investors and Starwood Properties insiders. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.